Hello, hi, and welcome to the another session of market update from 21st to 25th of October 2024. So let's start with the world economy. China reduced the 1 year loan prime rate, that is LPR. It was lowered by 25 basis point, and it came to now 3.10 from 3.35 recorded earlier. While the 5 year LPR rate was cut by the same margin to that is 25 basis point. To come to 3.6% from 3.85% previously. This has been done as a part of the package, thus making loans cheaper for mortgages and other loans. The UK came out with a composite PMI which is at 11th month low at 51.7 in the month of October compared to 52.6 recorded in the month of September. US, now we move to US Treasury bond yield. 10-year Treasury bond yield after remaining closing actually last week at close to 4%, remain elevated in this week and close to 4.2%. This was primarily because the rate cut expectation from the Fed, which was at by 50 basis point, is now reduced to 25 basis point. On the other side, the oil, if you look at the prices of the Brent crude oil traded at $75.90 a barrel, which was up by 3.73%. Even though the prices was contained corrected last week, again due to the higher production in the US side, we are seeing that this rate has been highly contained in this below $80 barrel limit. Now coming on to the gold, with the onset of all the tensions that is the world is facing as of now, and higher bond yields from the US side, major money started chasing the safe currency, that is the safer side, that is gold. And we could see that 24 karat gold has now elevated to 78,577 per 10 grams, which was up from last week's by 1.06%. The similar thing was observed in the US dollar index, which closed up at 103.996 from close, which was somewhere in the range of 103.00 in the last week. Of all the economic factor, the impact on the world market was seen that if you look at the US markets, after factoring in that the rate cuts would be on nominal side and higher bond yields, there was weakness in the market, and the markets showed a correction, and it closed. Dow Jones closed down by 2.6%. Nasdaq also closed flattish on 0.16%. The European market was also felt the heat from the increasing bond yields, US bond yields. Even they ended up in negative or moreover flattish. But in the Asian markets, we could see that the GIFT Nifty, Japanese Nikkei, they were in a negative zone. They corrected by 4.73%, 4.2%. This money, we could see that the most of the emerging economy money is moving into Shanghai, where the markets were up by 2.55% for the week. And this was again the stimulus package by the Chinese government could be seen into coming into play. India also came out with their PMI index PMI numbers. If you look at the Indian manufacturing PMI, it rose by a bit, closing at 57.4, whereas the service PMI index was also up by a very small point, 57.9%. Even though both these numbers are above 50 point, showing that the expansionary phase is continuing. But the major problem is the contraction on the number front, which can be seen over the last few months that's happening on the PMI. For the FII, if you see in the Indian market, for the week, FII sold close to 20,000 crore worth of equity, whereas DII bought 22,009 lapped on 22,900 crore worth of equities in the last 1 week. If you look at this, with this number for the month of October, the FIIs are now close to 1 lakh crore selling worth of Indian equities. So, major reason attributed to this selling is, of course, the stimulus in the Chinese market, the overvaluation that we were witnessing in the Indian market. The third reason was, of course, the higher valuation which we saw in the was the second reason. Sorry, the third reason was the earning cycle which has come, which we are seeing in the Indian economy right now is not up to the mark, where this earnings are in the single digits as of now. We come to now the weekly performance of the Indian indices after the lot of money being pulled out of the equity market by the FIIs. We saw the Sensex and Nifty corrected by in this week by 2.2 to 2.7%. Nifty Bank corrected by 2.5%. Nifty Mid Cap corrected by 5.75% in this week. Nifty Mid Cap corrected by 6.45. So it's interesting to note how the market has corrected from that peak. The peak Sensex and Nifty hit a peak of in the month of in the last month, close to 26th of September, and from that time we are down by 7.5%. Whereas on the Nifty Bank side, we could see that we are corrected by 6.6%. Nifty Mid Cap is currently corrected by 9.16%, whereas the Nifty Small Cap has corrected by 8.7%. So Nifty Mid Cap and Small Cap has shown a larger correction as compared to the stable indices of the Sensex and the Nifty, which we have been executing for quite some time. Now we are looking at how the valuations are placed as of after this correction. Nifty 50 trailing PE has come to a valuation of 22.6, which is just above 2 years high and below 5 years average. Nifty Mid Cap 150 trailing PE is at 41.1, near 2 years high and 5 years high. Nifty Small Cap 100 trailing PE is at 33.7, close to 2 years high and just above 5 years average. We will look at the Buffet indicator, which is the total market cap to the GDP. As of now, the market still shows that the indicator shows that the latest markets are modestly overvalued with a ratio of 105.54. Now we move to the Indian bonds. Indian 10-year government bonds were trading at 6.959%. As the RBI had stated that the rate cuts would take some time to come in. The 10-year, if you look at the yield curves in the long, medium, and short term are still flat. So that was from my side. Hope you enjoyed the video. Do share, subscribe to our channel, and keep